Welcome to Smith Weekly Discussions, an occasional program for our readers and listeners of Smith Weekly Research. Please note this program is a private discussion, and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Eric K., Chris T., Bart P., Suk D., Levi B., at SNS 5500, at Plainview Danny, Mikhail H., and at Dre 2090 1423. Returning to the show today is Bill Sheriff. Bill is Executive Chairman of Encore Energy, a U.S.-focused uranium asset explorer and developer stage company with assets spread across New Mexico, Arizona, Utah, and Wyoming. The company is listed on the Toronto Venture Exchange under the symbol EU and also on the U.S. OTC markets under the symbol ENCUF. Bill, welcome back to the show.
Thanks for having me back.
Well, Bill, we've got a lot of questions from the audience, so I've cut mine out for purposes of time. But first off, besides yourself, which of the following is your favorite sheriff character? Kurt Russell as Wyatt Earp in Tombstone, or Clint Eastwood as Walt Coogan in Coogan's Bluff?
You know, it wasn't one of my favorite Eastwood films, but it's hard to go against Clint Eastwood, you know. Fair enough, but who can go against Clint Eastwood? You know, his body of work stands in front of his individual efforts.
Certainly a fine actor and director and great guy to watch. Well, let's get to your updated view on the market and where we are headed for 2020, Bill.
I guess I would start off just characterizing the uranium market. Most of the companies we deal with and look at in our little universe are listed on the TSXV, which, you know, I think we've got a bit of a cold because our neighbors have pneumonia. And by that, I simply mean the TSXV is mostly gold mining stocks, and then probably the second body is copper and base metal, and then, you know, a handful of uranium companies. But, you know, the whole index is being caught in terrible bear market. If you know, it made new lows for the year yesterday. It's less than 8% off of its all-time lows from, you know, the last 10 years. You know, the investment climate in Canada has basically dried up. You know, I think by and large, it's at least towards the gold and typical metals, it's a reflection of lack of revenue and, you know, lack of really even remotely good odds in the exploration business. And, you know, we're not in the same business in uranium, but nonetheless, you know, we're still caught up in that overall investment climate, which has, you know, certainly put a damper on things. I think, you know, you compound that with, you know, the clear messaging yet inaction out of Washington, which, you know, quite frankly, here again, it's the same situation. You know, the China trade talks have dominated the news, and, you know, have propelled the Dow Jones up several thousand points with absolutely no progress on the trade front, simply by coming out every other day or every few days saying that we've got a deal, we're near a deal, things are getting better, but nothing ever seems to happen. So, you know, notwithstanding that, I see a few tariffs were eased this morning, mostly on the humanitarian basis, but you know, I think the lack of credibility coming out of Washington so far, the lack of action, the terrible dissension that we're seeing, you know, maybe bordering on, I don't even want to go there, but you know, the splits in Washington are exemplified throughout the country, and it's not a good thing. While Rome burns would be a good analogy to how the markets are acting on the big board. And as long as the markets are acting like that on a big board and the energy prices are subdued, it's hard to garner any interest aside from the Canadian situation in the U.S. situation for small uranium companies. Simple fact of the matter is, you know, it's hard to argue with the success formula over the last 5 years, which is you wake up in the morning and you buy the S&P and you're up at the end of the day about 9 out of 10 days. Certainly since Trump took office, that's been the case. You know, not without a certain amount of meddling by government forces probably, but nonetheless, that's been the best recipe for success. You know, at some point the party will come to an end, the music will end, and, you know, we'll get back to more semblance of a normal market. But trying to, you know, predicting the future is easy, predicting when is the difficult part, and sometimes seemingly impossible. So against those backdrops, neither one of which are particularly positive, I do think we bottomed in the uranium market. I think we saw the lows, in the last 18 months. I don't think we're going to revisit those. At the same time, I don't see a whole lot of positive developments in terms of, the big picture in the next 12 to 18 months. So I would say probably a static environment over the next year. I know the supplies are tightening. A lot of the numbers are looking better. And I do think the prices will move up. The question is, are they going to move up enough to affect, most of us at the smaller end of the food chain? As usual, we're in a defensive position. I guess if you can be aggressively defensive, that would be a good way to look at it. But we're adequately financed, very low on our burn rate, and we're assuming it's going to be a continued long slog. That there will be good returns at the end, and we're getting closer to the end. The light at the end of the tunnel is probably not a train, and we're looking to, improve our lot when the day does come. So, we're looking at various possible acquisitions and that sort of thing. We'd obviously held out, I guess, slim hope for for the 232. We were never a big advocate of that in terms of its success odds. In fact, I think I was probably pretty negative on it. And now, all that hope has turned to the Nuclear Fuel Working Group. In the hearings just the other day for the new secretary, the subject came up, and it had indicated that they were nearing a conclusion and hope to share that soon. But that's in direct conflict with several other reports coming out of various committees that they aren't expecting any significant results to be reported out of NWFG, at least not, or in NFWG, at least not, any sort of a summary paper or anything. So I hate to say it, but I think we're in for more of the same. I think we'll see enough price rise to help Cameco, some of those guys. I don't know that over the course of the next 12 months, you're going to see a lot in our end of the sector.
It is a bit of a clown show out there, there's no doubt. And it'll be interesting to see what finally breaks coming out of all this across the various sectors you mentioned and this fuel working group. And I wanted to ask you just briefly a little bit more about that. Were you involved at all with providing any comments or feedback to these various folks in that group? Do you see something coming out, Bill, over the next 6 months, or?
My bet is you're going to see very little other than talking out of both sides of your mouth until after the election, or lynching, whichever happens first. I think, it depends how much more ridiculous this whole political situation gets. It's already to the point that, I'd never thought I'd see it to this extreme. But, maybe the more ridiculous it gets, the more inevitable re-election is. And, I think that that's probably the best thing for the domestic uranium industry is if Trump gets in again. I think there'll be some very positive actions taken. At the same time, I don't think there's a chance in very warm locales that anything meaningful is going to happen before the election. He doesn't do anything without calculating, even some of his errant tweets. I'm a firm believer that he has a plan behind everything. That doesn't mean they all work or are understandable by normal people, but he plans. I think his first objective is to get into office again. And, I think he's firmly committed to nuclear power and will take the appropriate steps once he's back in, but he's not about to, he knows he's going to get in by a narrow margin and probably electoral college again, like last time. So he's not about to take a chance and start a ground fire of opposition or groundswell of opposition, in a state like Arizona that's up for grabs, or, quite frankly, in New Mexico, which is typically blue, even Texas, there's, there's only a few isolated blue spots, but they're growing. It's a changing environment. So I don't think he's going to be rocking the boat too much until then. So I think you'll see a lot of talking out of both sides of their mouth, which they're really good at.
Yes, and it's going to be a really interesting outcome. This next election is really going to be something, and I think it's going to potentially show some serious direction going forward. And as you said, even in places like Texas and some of the Midwest, it is increasingly creeping to blue as well. So I don't know, the outlook is questionable in my view, but you're a lot closer to it than I am, Bill.
And why wouldn't it change? Everybody gets free money. What's wrong with that, right? You got unicorns and rainbows around every corner.
Yep, it's really something, man. It's all about equality and fairness, but somehow talent has been thrown out the door. So I want to talk just a little bit more about this broad market view of yours. What if this market doesn't turn, Bill, until 2022? Is there any changes that you would implement at Encore to adjust for this, or is really the company already in that mode, given the current capital consumption and how you see the company with a conservative approach to G&A versus other G&A consumers in the space?
Going back to your last question, which I guess I got a little tangential on the answer, we have had a bit of input to the NFWG through a bit of a lobbying effort. And, that's continued, albeit on a reduced level from the 232 push. And so we have made our thoughts known and continue to do so. But yeah, I mean, aside from that, we're, I guess, still in bunker mode, other than, taking consideration of potential offers that come along. Quite fortunate in that we don't need to finance at the moment, don't need to for the next couple of years. Yeah, I guess that sums it up. We're in bunker mode, and we've got an awfully good position. We do think that once the smoke clears after next November, January, that the odds at least currently favor Trump getting in, which mean that the odds for some significant relief in the uranium industry domestically are quite good. It'd probably be a nice time to take an extended vacation other than reviewing opportunities to improve our status in terms of our portfolio, which of course we're doing, but very selectively and cautiously, like we have over the past few years.
Yep, absolutely. Slow accumulation, have cash, have capital, allocate accordingly, opportunistic. I think those are all key parts. And of course, lastly, patience and and solvency.
Yeah, and I mean, you really got to be in it to win it. And as cliche as that may sound, you have to be in it to win it. Rather than making sure you've got a 100% perfect portfolio going into an absolute certain market. We're quite content to play our large and dominant in some sectors portfolio, and make certain that we are in it when the time comes. It might not be the maximum return as if your timing's perfect, but perfect timing is usually a factor of luck, not planning.
Yes, absolutely. That is correct. Well, what's your view on Encore's position with regards to timing in the upcoming uranium cycle in comparison to how Energy Metals was set up during the last cycle, Bill? Can you kind of compare, contrast, where are we time-wise and as far as position for the company?
Well, the whole 2004 to 7 thing was, a bit of a perfect storm. You had major mine shortages on just about every continent. Certainly the big three were MacArthur and Rossi and Ranger all at the same time, coupled with a number of other events that coincided. So it was a bit of an anomaly in the market. And then of course you had one sole producer that pretty much supplied and dictated the spot market. So it's hard to compare in terms of timing, because it was I don't know that it was a true supply demand imbalance, whereas I think the one that we're moving into is. And in that regard, it'll be a lot more. I think I've said before that in my opinion, it'll be a lot less explosive, but a lot more longevity to it. Of course, that's a better way to have an actual business, as opposed to last time it was a bit more of a crunch in the market versus a fundamental change in the market. We still had the overhang that was in the market. It just wasn't available at the time. All this material since 07 didn't just materialize since, although a good amount of production was established that continued. So the decline in the eating away at the stockpile certainly slowed down when we actually produced almost our yearly demand a couple of different years in there. But it's a bit like apples and oranges. But I do think that while this one is probably more predictable than that one was, no one believed that one until it was well underway, and yet everyone believes this one's coming. So in that way, it's very different. But this one takes a hell of a lot more patience. Obviously, we all have thought that it'd probably be improving more than it is by now, even myself included with my bearish views. But the number one thing it takes is just one heck of a lot of patience.
Good points. Absolutely good points. And when we got into this in 2017, we had said 5 years, and so we're halfway wrong in that process to 2022. Now, can you just elaborate a little bit more, Bill, with your lessons learned doing this before and where Encore is today? Do you see that the company is better positioned with how you've set it up based on your experience and how you've also set up this new company for this cycle?
Well, I think there's, been a little less opportunism this time around and a little more planning. And, by that last time was a bit of a mad pounds and mad rush to pick up pounds in the ground. And everybody was pretty much, most of the newcomers to the industry, which was most of the players, were all starting at ground zero. So there was a scramble not only for pounds in the ground, but, also to be able to spell uranium in many instances. All the basics, as well as the key, and this one materialized a bit late, I think, was to go out and get the actual talent that actually knew how to do something with it. And I still maintain that your technical staff is a heck of a lot more scarce than uranium. We've gone through, I don't know how many cycles now without replenishing the technical expertise, which is really a bottleneck that's coming down the road. And whether that's going to actually be a catalyst for much higher prices, or simply a second stage booster to it, it will rear its head, just because we've got a real lack of technical expertise in the field, compared to what would normally be there had we gone through even several normal cycles over the last 40 years, as opposed to not really any. So I guess, learning from the past, we've made sure that we've held on to the technical expertise. We've got a pretty positive group given the reality of the situation, and just have made a real focus on low cost acquisitions, which compares starkly to the difference back during the 04-07 run, when you really didn't worry about what you paid for stuff. You obviously tried to get a good deal, and were as prudent with shareholder money as possible, but money was abundant all the way up. Really, after the first 6 months that it started, there was plenty of financing money for everyone. It really became a bit of a fad in the junior industry, but you've also got to put that in the general economic backdrop back then. And up until the 08 crash, it was pretty hard to lose money in the stock market, regardless of what you were in. So we had some have called it a super cycle. I won't argue with that, but commodities were up, equities were up, everything was up. So completely different backdrop in terms of where we are in terms of the general economic background as well.
Bill, another question that just came to mind as you were talking there, that you said something that spurred this. Do you see with some of these companies that are starting, that were really focused on uranium, that have now kind of, I guess to some degree, lost focus and have moved out into whatever the next hot metal might be? What are your thoughts on those companies that are doing that? Is it because they're tired? Is it because they're impatient? Are they just trying to find somewhere where they can get a stock pop? And will enCore be doing any such actions?
My first observation is they're probably trying to survive. It's been a long haul, and not everybody was as prudent with the cash. We were very fortunate to have financed a couple of times when we did. We took the gamble going into 232 that there wouldn't be positive resolution, and financed in front of that. A number of companies were waiting, and were certain it was going to happen, so waited to fund afterwards and haven't been able to this point. Some of it's probably seeing legitimate opportunities and going that direction. Some of it's probably trying just do something. One of my mentors always said, do something even if it's wrong. And as crazy as that sounds, I think it's true, because if you aren't doing something, if you're up against the ropes and you aren't doing something, then your fate's pretty well sealed. So I think some of them, I assume, as long as they're staying in the uranium business, are doing it as a crutch to get along to the finish line, which is probably a good idea. Others that may have abandoned uranium, probably weren't all that set on it to start with, and wish them luck in more fertile ground for the time being. But we're committed. Would we look at other opportunities? I guess I'd say only if we saw some immediate cash flow opportunities. Anything with cash flow here, again, I think the whole sickness of the TSXV is attributable to one word or lack thereof, and that is revenue. So anything you can do to help fund yourself, I think will be rewarded with a little bit extra reward than whatever reward you're going to get just in your own sector. So we aren't looking to get out of the uranium business, to answer your question first and foremost. At the same time, if we saw an opportunity that we thought was a revenue within grasp, we'd certainly take a hard look at it.
Yes, absolutely. And I think there is a mix. I think there's some that are just shouldn't have been there in the first place, and there are some that are trying to get along and doing whatever they can. And you're absolutely right. The ability to have some cash flow besides just raising capital is a good thing. So I appreciate your insights on that. Well, where are we on capital structure, Bill? How many shares are out now, and how long will current capital last you?
Well, the share count hadn't changed, and I don't have it right at my fingertips just because it hadn't changed. And the real answer is, we've certainly got at least 2 years of capital, and probably 3 or 4 if we have to make it last.
How about plans for 2020? Can you highlight anything that you guys might be looking at? Would it be further acquisitions potentially? Would it be doing some drill work? Is there any plans for any of the projects during 2020 to do drilling, or will there be any acquisitions potentially?
Well, here again, I'm not a big advocate of drilling. There's enough uranium out there. It's a matter of getting it through permitting and production. So, depending on how things materialize through the year, we have an awareness and a political initiative for increasing our awareness and acceptability in a number of communities and jurisdictions, canned and ready to go at the drop of a hat. I think that would be the first sign you would see if we think things are really breaking and moving. And I think we will get some visibility on that as the election nears. I mean, if we see that it looks as if Trump will get back in again next time around, then we may very well uncork that and start moving forward on it. So I guess in the meantime we're rearranging the chairs in the bunker, but not spending any money doing it, and keeping our eye on possible acquisitions. Certainly that would be a good thing for us. But mostly we're to reiterate in our aggressive defensive stance. Preparedness and survivability, I guess, are the two key words.
Let's talk just briefly about the Arizona projects. Some of the projects that don't have a ban and the ones that do. If the ban was lifted, do you see that happening under Trump? Obviously, probably during a second term. How does that change your priorities? And would the company's strategy change at that point?
Yeah, I think it changed pretty quickly, and probably go even into drilling. We looked really hard at drilling this year for a while when it looked like we might get some immediate or at least more immediate relief on that. So drill plans are drawn up, if you will. Obviously, the Arizona properties are the highest grade in our portfolio. Certainly not the biggest, but the highest grade, and relatively short timeline to development and cash flow in general. Obviously you've got to have a toll milling facility or look at building your own mill, which is problematic in terms of timing. Although we've certainly looked at that and have preliminary discussion and ideas on that as well. But I think clearly the most opportunistic would be to get in and develop one of the high grade projects as quickly as possible and hopefully come up with a suitable toll milling arrangement for processing. When that sort of grade, you can transport an awfully long distance. So.
Right. Well, you keep twisting on old Mark Chalmers' arm, and I'll do the same, and we'll keep it moving.
One thing nice having them as shareholders, so it does keep the line of communication open.
Now, you've had some agencies such as the USGS throw out some pretty sizable estimates. I think in some cases, 350 million pounds approximately from 2015 data they put out on the Arizona breccia pipes. What does management see as a target size, or just give us a range that you believe can be proved up within your assets there?
Oh boy. I'm going to do what I seldom do, and that is go completely off of your question. I'm not going to give you an answer just because I don't think there's really a prudent answer to give you. It would sort of be a bit of a wild ass guess to start with, but so suffice it to say, we've got several dozen targets that are compelling anomalies that have not been drilled, a handful that have been drilled successfully. Target size out there is anywhere from 2 to 10 million pounds, more typically 5 or 6. You or the audience can do their own math on that and come up with a ballpark number that's probably just as good as ours, quite frankly. It's a bit of a factor of taking your best data and drilling them. Based on the VTEM geophysics data, there's a very high success correlation between tier 1 targets and positive drill indications of a mineralized breccia pipe. So, in terms of your odds of success, it's very high on those targets. At the same time, nothing's 100%, and certainly not in finding something under the cover of the ground. But it's certainly among the highest exploration odds you're going to find. If you can get that, and as I say, we've got a number of targets there. So it would definitely, going back to your previous question, would change our game plan a lot in that regard, and our focus certainly, but at least our immediate focus. And but here again, it's largely dependent upon on political action at this point. There are a few pipes there that are not encumbered. Certainly, a handful of those. And in full disclosure, one of our earlier drilling plans would be on some of the ones that are not in the land of questionable ability. And those would be the ones we'd drill. At least the first one would be one of those. Just because I'm sure there'll be a bit of political tug of war regardless of the decision that comes down.
Well, I've certainly set my expectations low, and certainly of the opinion that under promise and over deliver. So appreciate your views on that, and it'd be interesting to see how things move on. Now, just one follow up with that, Bill. What are your thoughts on the work of Dr. Karen Winrich regarding Arizona Breccia Pipe collapse? And do you see that work helping out the company with some of the targets you have?
Yeah, I've known Karen a long time, and she's obviously knows quite a bit about them and has spent a lot of time on the plateau or on the rim there working on them. Here again, I think her contributions have been large to the science, but I think ours has actually gone maybe a more focused approach to relying very heavily on VTEM and drilling. We've got quite a body of work between the Carbide Data, who of course had the Energy Fuels joint venture back in the day when the pipes were in their heyday. So we've got an enormous amount of data on them. We've the Quatera guys, Gene Spearing and all went and step further with the VTEM, and the results are compelling on the VTEM, and the correlation here again to discovery is very good on your best targets. So I think we're more in a mode of implementation once the legal situation is clarified, as opposed to refining our scientific approach. I think we've got enough things on our plate in front of us to rapidly go and make a number of discoveries and prove up the ones we've got.
Let's move over to the Wyoming projects. Where do you see that these fall into priority, Bill? And what asset here will be looked at first and why? Can you tell us a little bit about the potential you see in the Wyoming projects?
They're pretty low, in terms of our viewpoint. I mean, realistically, I think you need to be in Wyoming if you're going to be, in the business. We obviously are not completely content with our position there and would like to improve it. But as a result of the merit of the projects, they're clearly they're taking out all legislative risk and that sort of thing. They're clearly of the third order behind our New Mexico and Arizona projects. We just don't have critical mass in Wyoming. We've only got a handful of projects, and there are some decent ones, but they're relatively small. Obviously always on the look to find something that's an attractive acquisition in Wyoming. But I would also say that probably competition for those assets is probably keenest in Wyoming, because to date anyway, they've been probably the most progressive state, to get anything moving on.
Yes, I certainly am a big fan of Wyoming and Utah as well. And there's a few good states left, Bill, and even Texas where you're at, it still makes my list anyway. But let's move on to New Mexico assets. What kind of environmental and political challenge do you see with New Mexico, and how best are you going to approach to deal with these?
Well, it's here again, I think a bit more of a linear thing. I mean, there's environmental opposition to doing everything. Especially anything having to do with energy. I was reading something the other day about nuclear power and wind power, and the simple bottom line is the liberal side of the political equation, quite frankly, doesn't like any kind of power. Nothing actually works. It's sort of like, we're going to sit back and throw rocks at everything, but we're not going to have any real positive suggestions. So, wind power is great, except every 20 years you got to replace the turbines, at least those that don't go into flames in the intermediate 10 years or 20 years. Everything's got a problem. So I guess the answer is just sit around and do nothing except protest. So in any event, sorry about showing my political leanings, but it's hard not to these days. Going more specifically to New Mexico. I mean, it's the environmental thing's going to be there no matter where you are. So taking that aside and shelving it, I don't think it's going to be any more intense in New Mexico than Arizona or anywhere else. With the possible exception of Wyoming, and that's simply because you don't have a lot of population there, and that you do have is still considerably to the right on political leaning. The key really is, in the First Nations or with the Navajo Nation. Here again, we think we've got a better approach. We've, proven that strategy in our sister company in the Yukon, where again, we're dealing with same language-based peoples, the Dene culture. Doesn't guarantee success by any means, but it's a fresh new approach, and clearly the old approach was not working. At the core of our approach is, not only education, but alignment of interest. And, I would dare say no one's ever aligned their interest before. And, going in and, promising a handful of jobs or, building a gazebo in the park, in town doesn't really align your interest. It's a nice thing to do and all of that. And that's pretty much all that's been done in the past. But we think that a true alignment of interest would involve them having equity and sharing in, profit sharing in moving something forward. That way, everyone's pulling in the same direction instead of an opposing direction. So, it's not an overnight thing, and it's, we've always said, New Mexico is the big treasure chest. It's the biggest, best deposits in the U.S., but it doesn't come without a price. Historically, most of the uranium mined in the U.S. came out of New Mexico for that very reason, that it's, geologically better endowed than anywhere else in the U.S. So given that, we think it's a challenge that the prize merits the effort. And we also think it's the right thing to do. So that's, like I say, one of the initiatives that we have canned and ready to go. But at the same time, you have to pace yourself on everything, no matter how good the opportunity is, because here again, if you aren't in business and you accomplish your goal, it doesn't help a whole lot.
Right, and it is a long-term approach with these community relations, and I think that equity share is also a good piece to add to the pie there.
Yeah, I think it's critical. If you don't have everybody pulling, mining of anything's a hard business, and uranium is probably even harder than the average. And you've got so many factors involved that aren't necessarily geological. And if you don't have everybody pulling in the same direction, it's just that much more of a mountain to go up. So we think not only is it the right thing to do, but I think it's the absolute necessary thing to do. But it's easy for us to contemplate that, thinking it's the right thing to do.
Right, absolutely. Certainly on the ground feedback from folks that are involved certainly is a good piece as well. Let's move on here. Let's say we have some ideal conditions in the market. Regarding project timeline and capital needs, Bill, can you speak to one key project that enCore has that you guys would go after that would require the least amount of capital, the shortest lead time? What asset would be attacked first?
Well, here again, I think, the presence of revenue is important. So assuming we had a good market, our smaller assets in Utah that are dry could go into production the quickest in theory. Permitting time in Utah, you already mentioned it's a favorable state. Certainly it is. You're clearly well under a year to get a mine in operation there. So while they aren't big, it would establish cash flow. And I don't view it as a linear question or answer. I think at the same time, and it depends how things evolve. If things evolve where you're clearly embarked on the right track in terms of the uranium price, you probably unleash all three efforts at the same time. And that would be number one. Number two would be the drilling campaign on the breccia pipes. Whether we're have the land situation or not clarified, we've certainly got a number of projects there that are not encumbered, so could move forward on those, and at the same time, fully engage on the community level and political level in New Mexico for the long-term plan. So that part really hasn't changed in terms of a short-term, mid-term, and a long-term goal that can all three be pretty much operating simultaneously.
Well, let's move over to talent and management. For the audience who may not be familiar, what does Dennis Stover bring to the company? What is his importance regarding the development at Inkai? And what will he be doing once things in the market get underway?
Well, Dennis is a PhD chemical engineer, and he's been involved many, many years. I don't even remember the exact date, but going back to South Texas, many years with Rio Algam, a number of different environments. And he essentially built South Inkai, or designed the plant. Didn't physically build it, but so we've got certainly his expertise. It's certainly, in terms of the ISL side of things, invaluable.
Following on to that, Bill, can you speak to the experience and accomplishments of your management team? And are you of the opinion that your management team is really among the highest experienced teams left in the sector?
Yeah, I'd certainly agree with that latter statement. And I think the key is that we've tried to recruit, and I think we've done a good job, guys that are committed to the long-term picture. We aren't active day to day in terms of, out turning wrenches and that sort of thing. So our burn rate's been able to be kept in check almost entirely. But, Richard Cherry, who used to run General Atomics, he's got a strong background in marketing, operations, conventional mining as well. And marketing and contracting of uranium is a significant part of it. It's almost like the fuel chain. You've got so many parts of it. Well, you've also got so many parts of it that you have to look at as a small uranium company, including your permitting, which is where another member of the team, Mark Paliza, comes in very strongly, is in the permitting, as well as operational experience in the ISL environment, having had a big hand in uranium resources, previous operations in Texas. We've got Doug Underhill involved with us as well, who's spent a good deal of time on a worldwide basis looking at uranium deposits, which in formulating your views of the market is quite helpful, as well as a great deal of time on the ground in the U.S. looking at individual deposits, both ISL and conventional. And having him on as our chief geologist is certainly a huge plus and win for us. And Gene Spearing, having joined our advisory board, his experience on the breccia pipes is phenomenal. And go back a little further in his career, he's got a very, very wide breadth of experience in most geologic environments. So, you put the whole team together there, and it's like I say, it's not a big team, but it's specifically adapted to this. And even on the reclamation end of it, which we're a long ways away from that, but it's still something you've got to think about, because in your permitting you've got to account for it. And on that end, we've got Joe Harrington on our advisory group, who's he reclaimed the Sweetwater Pit Lake and has won awards for reclamation in a number of aqueous and land-based applications or environments rather, with a number of different metals, including uranium. So pretty much a complete team.
Well, Bill, is there any talent that you see that's missing at the company right now? If you needed to further supplement your talent, and if you could select from the existing sector talent, would you share with us maybe a person that you see that has some good expertise in this sector?
Well, I think the one thing, rather than an area of talent, I think we've got a pretty good coverage. Obviously, if you go into operations, you need more of it, depending on what part you need. So
Yes.
there'll be that need, and it'll be keenly competitive. At the same time, having really established good people at the top makes it generally easier to compete for talent, working with them and below them. So, we acknowledge there'll be stiff competition for, the people to fill in under the top management, but, are confident that we'll be able to do that as well as most, and better than a lot. The one limitation, of course, will be salaries. Won't be able to match Cameco and that sort of thing, but or Energy Fuels for that matter, probably, once they're in top-notch financial shape. But there's some advantages to working for whom you want to, and we haven't had a problem in the past staffing, and I don't think we will going forward. Coming back to that, the one thing I would mention, I failed to mention before, is we don't have any technical holes, I don't think, in the group, and you can never get enough, but we're quite happy with the position we've got. But the one thing we have become increasingly aware of, it's not technical skill, but we could use some youth. I look around at the board, and there's an awful lot of gray hair, or white hair, and no hair. And quite frankly, we've here again, this is a testament to having skipped a number of cycles in the industry. Most of your talent is not 30 years old anymore. So we have recruited a younger fellow that's come in as a vice president level, and his number one job for the next few years is to spend as much time with these guys and learn everything he can from them. And it's not the answer to the future entirely, but it's a good start. And not going to have this brain trust around, not just ours, but everyone. Everyone advances, and there's so much knowledge there that it's important that this gets encapsulated and carried on to the next generation, if you will.
Absolutely. I agree 100% with what you're saying there. And there is a lack of youth and new talent coming into the sector. It seems to be the case across the mining industry, which may start to put the social status of places like the U.S. and Canada on notice of you better be careful with what direction you're taking, because it could affect much more than what is being seen ahead of us. Let's move on here, Bill. During the last cycle, did you have exposure to any other uranium companies in the sector besides Energy Metals? And in retrospect, if you could have had exposure to another company, would you mind sharing with us what company that might have been?
Well, we ended up doing 5 mergers during our time at Energy Metals, so I guess the best answer to that is most, not all of them, as we went after a couple we didn't get, but most of the companies that we really liked, we bought. There were a few that escaped, but there were, we ended up taking the ones that we wanted and combining them into a team and integrating them, which is what built the final company.
Do you see Uranium One looking to offload assets in the U.S., perhaps some assets that you had with Energy Metals? What are you seeing out in the market for potential further sales of assets within the U.S.?
Here again, that's a question that's not absent political ramifications as well. The Russian involvement situation there certainly is an interesting one. Yeah, I think that's subject to change based on politics, but I don't want to speak out of school, but I think they're probably pretty happy with their current hand. You'd have to ask them to find out, but we stay in touch with them. We stay in touch with a good number of not all the colleagues in the industry, but a good number of them, and obviously we've got some former attachments to them, so we maintain lines of communication with them. If anything comes up, then I'm sure we'll be able to review it.
Sounds good. Well, Bill, is there any desire for enCore to look at assets outside the U.S.? Specifically, the question was, are you going to look at assets in Canada?
No, that was easy.
Okay, easy enough.
There's nothing wrong with Canada. In fact, it's for exploration and the home run hit. It's probably the best jurisdiction around. But the lead time and the size deposit you need and the competition for mill space and blah 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 blah. It's great for those that want to do that, and I'm not discouraging it. From time to time, I've been known to take a stock trade up there, but it's not what our company's set up to do. Right now we're seeing a couple of the companies up there that have been the real epitome of successful exploration, that have drilled their brains out, have built up beautiful, nice big reserves, and have absolutely nowhere to go with them right now. I know one of them's talking about producing themselves, and you almost have to say you're going to do that, otherwise you devalue your company. But realistically, the difficulties of production in the Athabasca Basin from an engineering perspective make ISL look like a walk in the park. And they certainly aren't. There's complications with every bit of mining. So it's just it's a good game. It's just a different one than we need. And there's some big deposits in Canada that have been known forever. My favorite one to always talk about is Midwest. It's been around since the 70s, with I don't know how many millions of pounds of ore at 3%, and it's still sitting there, and it's probably going to sit there for a lot longer. It's just a different chapter. So more power to those that want to do it. It's high risk, high reward, but we feel our group is designed to stay domestic.
Right. It's interesting you say that, and you certainly know some of the lead time challenges with some of your ventures being up in Canada and so forth, and the timing and a lot of the problems there. And also, of course, as you mentioned, there's a number of companies on the uranium side up there that have really just bled out as a result of the status in the market, and it could go on for quite some time yet.
The one caveat to that, and it sounds kind of extreme, but anymore we're in silly season on geopolitical things. So if Wexit were to prevail, we might reevaluate that. Not everybody may be familiar with Wexit, but that's the movement that's gaining quite a lot of momentum. Still unlikely to happen, but whereby the Confederation of Canada is broken up largely with Alberta taking the lead. See which way Saskatchewan fell on that. But the U.S. is not alone having severe political dissension and division. Canada is, if anything, more divided than we are.
Yes, it'll be very interesting to see what happens with some of these political situations that are going to play out over the next couple of years, starting 2020. Bill, looking out there today, if you wanted to invest or speculate in the sector, is there a company that really stands out to you in this sector?
Well, I mean, clearly the guys that are producing and able to hang on to production without, going down with the ship are things that catch my attention, and as an investor, and that's a pretty small list. You gotta hand it to Energy Fuels, and you are. Here again, the revenue is key. It gives you some options that the other companies don't have. I think those would certainly come to light. Once you get away from the revenue, then I think it's the sustainability that would be my next thing, and I think that's right where we fit.
Bill, personally, do you own any uranium claims?
No, obviously used to have, I don't know how many thousands of them, but all of my stuff went to either the previous company, and have not owned any personally since.
Very well. So now Eric Sprott is a key supporter of Golden Predator. Do you think that he is looking at the uranium sector again and looking to deploy capital into the sector soon?
One thing about Eric, he's pretty, until he makes his moves, he's always holding his cards pretty close to his chest. Once he jumps into a sector, it becomes pretty obvious pretty quick. And, we can only hope for that day to come again. It certainly hasn't materialized yet. And, I think, with the success he's enjoying in gold, it will take a bit for him to come in. But, when the timing's right, he's a very savvy investor. So I would expect to see his name involved at the right time. And who knows, maybe that'll be the signaling of when we're really underway.
It certainly is interesting because I was just speaking to Alex Black of Rio 2 the other day, and he just mentioned, to take some words out of Alex's mouth, mentioned that Eric really is single-handedly supporting some of these junior companies over in the precious metal space, and it certainly is the case.
Yeah, no, there's been, if you look at all the financings done in Canada over the last 12 months or so, I think I've seen various numbers, but I think Eric's personal money has been about 10% of the total cash invested, which is a testament to his, thank goodness he's there. And there's a handful that are still active in that space, and we've been pretty fortunate to have a lot of them involved with Golden Predator, himself, Rob McEwen, and Pat DiCapo, and several others. But Eric's our biggest shareholder on that side. He did very well with us in Energy Metals, and when he comes back to uranium, I certainly expect to chat with him. But yeah, without him, it would have been it's tough in the gold market in Canada. It would have been a whole lot tougher without Eric.
Absolutely. Well, Bill, for potential investors who are looking at the company at today's price level, what would you say to them, and why should they look at enCore Energy now?
Here again, I think we've got an established and proven business model over the past almost decade. We aren't going to be the guy out leading the charge, but we certainly will figure out which way the parade's going and get in it. Main thing is, we aren't the most aggressive company out there, but we want to make sure we're there when the party starts. And I don't want to win it all. I just want a little more than I'm entitled to.
Fair enough. Well, Bill, it's always a pleasure, and I look forward to chatting again soon with you.
All right, anytime. Appreciate the catch up.